There's a well-known saying that what gets measured gets done, and understanding ROI is essential for any business investing in digital marketing. It helps you determine which strategies are profitable and which needs adjustment, and this is often the biggest issue business owners have with people in my industry of digital marketing. Knowing what to measure and what it is exactly that they are paying for is a big thing. So by accurately measuring ROI, you can make informed decisions, allocate your resources effectively, and ultimately drive your own business growth. Welcome to the Digital Success for Business podcast. I'm your host, Leanne Cohens, the Digital Success Coach and owner of the agency Marketing Leap. And today we are delving into a crucial topic, which is measuring the success of your online marketing campaigns through return on investment, or ROI. There's a well-known saying that what gets measured gets done, and understanding ROI is essential for any business investing in digital marketing. It helps you determine which strategies are profitable and which needs adjustment, and this is often the biggest issue business owners have with people in my industry of digital marketing. Knowing what to measure and what it is exactly that they are paying for is a big thing. So by accurately measuring ROI, you can make informed decisions, allocate your resources effectively, and ultimately drive your own business growth. So let's pull back the lid, and in this episode, I will cover defining your return on investment in online marketing, so what that actually means and its importance, the key metrics that you need to track and the essential data points that will influence your calculations, tools and techniques for measurement. So basically how to effectively measure and analyze your marketing efforts. And then we'll go through some industry-specific examples and real-world applications of return on investment measurements across the different sectors. So by the end of this episode, you'll have a clear understanding of how to assess your marketing performance and what it is that you're actually paying for, and then how to make data-driven decisions to grow your business success. And there's a lot of info in this episode, so grab a pen and a notepad and let's get started. Let's start by defining return on investment in online marketing. So ROI, or return on investment, is a metric used to evaluate the efficiency of an investment. In the context of online marketing, it measures the revenue made from marketing activities relative to the costs and the money that you've spent. A great example is a networking referral group that I belong to. They have an online portal that tracks referrals as they are given, and it's a great way every year when renewal comes around to see how much my investment in the group has paid off over the last 12 months and whether the return on investment is there to stay for another year. This is why measuring your ROI matters, because it helps with your resource allocation, whether it's time or money. Understanding which activities and campaigns give you the highest returns allow you to allocate your budget more effectively. It allows you to evaluate performance, as ROI gives you a really clear picture of what's working and what's not, which means that you can adjust and refine your strategies. Plus, it helps justify where you're spending too much time or too much money in your marketing. Demonstrating a positive ROI helps in explaining marketing spend to stakeholders, even if your stakeholder is just your accountant. And it also helps with setting up your future budgets. So how do you calculate your return on your investment when you're doing your marketing? A basic formula is revenue from a campaign minus the campaign cost or ad spend divided by campaign cost times 100%. Now you know why you needed the notepad. In online marketing terms, net profit is money made or revenue generated from the campaign minus the cost of the goods sold. Then you have your total investment, which is all the costs that are associated with the campaign. Now that includes advertising spend, content creation, and then all the tools that you've used. So as an example, let's just say you run a Facebook ad campaign that costs $500. The sales from this campaign might have come to $2,000, and the cost of the goods sold is $800. So your net profit would be $1,200. So applying that particular formula means that for every dollar spent, you actually earned $2.40 in profit. And then you need to take into account the time frame to ensure that you're measuring your ROI over a certain period that captures the full customer journey. Don't expect results within 24 hours because there is often algorithms to train and to take into account. And plus, there's a fun marketing term called attribution, which is a fancy term for making sure that the sales are allocated to the correct marketing activity, especially when you're running a number of campaigns across different channels. Now, understanding and calculating your return on investment is the first step in measuring your online marketing success. It provides a really clear quantitative basis for evaluating your efforts and guiding any future decisions with your marketing. So now that you understand ROI, what are the key metrics that you have to track? We live in a world of data, and it's very easy to get bamboozled, especially with marketing jargon. So here are 8 key metrics to consider across all of your marketing efforts. Now you know why I said to grab the pen. The first one is your conversion rate, which is simply the percentage of visitors who complete a desired action, whether that's a purchase or a sign-up. High conversion rates mean effective campaigns and really good audience engagement. So let's just say your e-commerce site has had 10,000 visitors and 500 purchases. The conversion rate is 5%. The second key metric to track is your cost per lead, or CPL, which is simply the average cost to acquire a lead. This metric helps you work out how efficient your lead generation efforts are. A campaign costing $1,000 that generates 50 leads results in a CPL of $20. The third key metric to track is your customer acquisition cost, or CAC, which is the cost to acquire a new customer. This is important as it will show you how sustainable your marketing strategies really are. Remember, you're in business to make money, not to bleed it. So if you are spending $5,000 and you gain 25 new customers, your customer acquisition rate cost is $200. The fourth key metric to track is your customer lifetime value. Now, this is often used in business strategy and is simply the total revenue or money you expect to make from a customer over the length of time that they either work with you or they buy from your business. And this is important in understanding long-term profitability of your marketing. So for example, if a customer spends $50 per purchase, they buy twice a month, and they remain loyal to you for 2 years, your CLV is $2,400. The fifth key metric to track is your return on ad spend, or ROAS. Now this is always a fun one that's thrown around by marketers like myself, as it's the revenue that's generated for every dollar spent on advertising. But it's great for measuring the effectiveness of your paid advertising campaigns. So if you're earning $10,000 from a $2,000 ad spend, that would result in a ROAS, or return on ad spend, of 5. And a ROAS of 5 is not too bad. Now the sixth key metric to track, regardless of your industry, is your website traffic and behavior. Now in my agency, Marketing Leap, this is a complete department that we have with monthly reports linked to all of Google's analytics, ads, Search Console, and business profiles. The metrics that we monitor for our clients are the total visits, which is the number of visitors to your site, the website bounce rate, which is the percentage of visitors who land on one page and then disappear without interacting, the average session duration, so the amount of time that people spend on your website. And this is important because this allows you to understand how people actually interact and move around your website, and it enables us to optimize your website content and structure to improve engagement and conversions. Now, the seventh key metric to track is your social media engagement. Every social media platform has insights and metrics, and again, I do have a previous episode that does a deep dive into this, but the metrics that you really need to monitor are your likes, shares, and comments, because they are indicators of how your content is resonating with your audience. The next one is your follower growth, because that measures how your brand is actually reaching and how popular you're becoming. And then your click-through rate, or your CTR, and that's the percentage of users who actually click through your posts or ads to your website. And it's important to note that a high engagement often correlates with increased brand awareness and potential leads. Finally, the eighth metric to track is email marketing. And you guessed it, I have an entire playlist on email marketing, so make sure you check that one out. The email metrics that you need to monitor include your open rate, which is the percentage of people who open the emails versus the number sent, your click-through rate, which is the percentage who click through links that are on the email to wherever it is that you want to send them. And then your unsubscribe rate, which is the percentage of people who opt out of your mailing list. Now, unsubscribe rate is nothing to be freaking out about, because all it does is it means it's getting rid of people that you no longer, or that no longer resonate with what it is you have to say. These metrics gauge the effectiveness of your email campaigns and audience interest. So by regularly tracking these metrics, you can gain a really great understanding of your marketing performance, identify your areas for improvement, and then make data-driven decisions on where to spend your time and your marketing dollars to enhance your return on your investment. Now, accurately measuring the return on investment of your online marketing campaigns is essential for understanding their effectiveness and making informed decisions. To achieve this, using the right tools and techniques is crucial. So let's explore some of the most effective methods and platforms available. The most well-known one is analytics platforms like Google Analytics, which is a free tool that provides insights into your website traffic, the user behavior on your website, and conversion tracking. It helps identify which campaigns drive the most traffic and conversions. For larger companies, customer relationship management systems are essential, and these include systems like Salesforce, which is a CRM platform that tracks customer interactions across the different channels and then attributes sales to specific marketing efforts. Another one is HubSpot, which integrates marketing, sales, and service data, providing a complete view of your customer's journey so you have an accurate return on investment. The social media analytics tools, Hootsuite is one of the oldies and the goodies, and that manages and analyzes social media campaigns across multiple platforms, including metrics on engagement, reach, and conversions. Sprout Social is one of the more newer ones, and that offers social media management and analytics, and it actually helps businesses measure the impact of the different social strategies when it comes to their ROI. And in my agency, Marketing Leap, we use Metricool, as the reports are fantastic, and it also doubles as a great scheduling tool. So when it comes to actually tracking these metrics, you need to set clear objectives. So make sure that you have specific, measurable goals for each campaign to give you a benchmark for your success. It's also important to recognize that customers will use multiple touch points before converting, which is a fancy term for seeing you on Facebook, checking out your website, looking at Google reviews, and then maybe finally clicking on an Instagram advert. Experiment with different versions of your marketing materials. Now, this is also known as A/B testing, to determine what resonates best with your audience, to actually help you optimize for the best return on the money that you spend. And then make sure that you have a routine analysis of your data. Again, we do monthly reports to identify trends, measure against different objectives, and then adjust what is and isn't working accordingly. Now, by integrating these tools and techniques into your marketing strategy, you can gain a better understanding of not only your campaign's performance, but where you are wasting time and money, and then what you can do to improve your overall ROI. Now, you might be thinking, oh, this sounds great, but how does this impact my industry? So here are some very industry-specific examples that might help explain why this is so important. Now, a boutique store in Melbourne invests $1,000 in social media. Let's just say you're a boutique store in Melbourne and you invest $1,000 in a social media advertising campaign targeting local customers. Over a month, this campaign brings in 50 new customers, each spending an average of $100, resulting in $5,000 additional revenue. Now, this shows that for every dollar spent on this campaign, your store earned $4 in profit. Another example is a real estate agency in Sydney. Now, let's just say you spend $2,000 on a targeted email marketing campaign showcasing your new property listings. Now, this effort, for example, leads to 3 property sales, and that generates a total commission of $15,000. This means the agency has gained $6.50 for every dollar invested in that email campaign. Another example, an online coffee retailer based in Brisbane. Let's just say you invest $500 in search engine optimization to improve your website visibility. Over 3 months, organic traffic increases by 40%, leading to an additional $3,000 in sales. Now, this reflects a $5 return for every dollar spent on SEO. Maybe you're in professional services. Let's say a small accounting firm in Perth invests $1,500 in a pay-per-click advertising campaign, so Google Ads, targeting local business. This campaign then gives you 5 new clients. Every new client then brings in $1,200 annually. Now that's $6,000 in new revenue. And this shows a $3 return for every dollar spent on this particular pay-per-click campaign. And now these examples show that regardless of industry, measuring ROI involves setting clear objectives, tracking relevant metrics, and analyzing data to inform strategic decisions. By adopting tailored approaches, your small business can effectively assess the impact of your marketing efforts and drive growth. And yes, all these examples are services that we actually provide here at Marketing Leap. Measuring the ROI, or return on investment, of your online marketing campaigns is not just about crunching numbers. It's about understanding the effectiveness of your marketing strategies and making informed decisions so that you can grow your business. And you do this, again, by setting clear objectives. Make sure that you know what success looks like for your campaigns. Make sure that you are tracking relevant metrics and monitor the data that aligns with your goals. The next thing is use the right tools. Employ analytics platforms and CRM systems that will gather and interpret data relevant to your business and the size of your business. And then make sure that you are constantly analyzing and adapting. Regularly review performance and be willing to adjust your strategies accordingly, especially if something's not working and you feel like you're bleeding money. And remember, the landscape of digital marketing is dynamic. Regularly revisiting your strategies and measurements help you stay aligned with your business objectives and market trends. So thank you for joining me on this very condensed episode of the Digital Success for Business podcast. If you found this discussion valuable, please subscribe and share it with your network. And for more insights and resources, visit our website and follow us on social media. So until next time, keep striving for digital success and measurable growth. Thanks for tuning in to the Digital Success for Business podcast. Don't forget to subscribe, leave a review, and follow us on YouTube for even more tips.